Good morning. Thank you for joining us this morning to discuss the results of the updated mineral resource estimate announced last night for our flagship Fenelon Gold Project and the Martiniere Gold Project, both located on the Detour-Fenelon Gold Trend, as well as our exploration plans for 2023. I'm Sean Stokes, Corporate Secretary. Also on the call today from our team are Mars Quartz CEO, Brian Penny, CFO, Attila Pentek, VP Exploration, Victoria Vargas, Capital Markets Advisor. Before we begin the discussion of the updated mineral resource estimates and the 2023 exploration program, we'd like to remind you that some of the comments being made today may include forward-looking statements. I'd like to ask everyone to review the forward-looking statements disclosure provided in the news releases and in today's presentation. Please note that any financial details that we are presenting today are quoted in Canadian dollars, except where otherwise indicated. Once management has completed its presentation, we'll move to the Q&A session. Please send your questions by using the Q&A function located at the bottom of your Zoom screen. Finally, if you don't yet have a copy of the news releases or today's presentation, you can find them on our website at www.wallbridgemining.com. We'll now start the presentation.
Thanks, Sean. Good morning. I think it's important to mention a few things before we get into the review of the updated mineral resource estimate and plans for 2023. Yesterday's announcement is the result of our cumulative efforts since the last mineral resource estimate in 2021 by designing a program that focused on improving the mineral resources at Fenelon and Martiniere, and we're very proud of what we've accomplished so far. I'd like to thank everyone for their valuable hard work, our board of directors, management, and staff. I also wish to thank our shareholders who've been patient with us. Additionally, I want to thank the communities surrounding Fenelon for their support, especially our First Nation partners of Waskaganish, Washasibi, and Abitibiwinni, for continuing to support our efforts in the development and advancement of our projects. It's a rare investment opportunity where a company owns and controls a large district-scale, underexplored, prospective land package in a safe jurisdiction with great infrastructure. We're fortunate that our projects are located in northwestern Quebec, a jurisdiction that embraces and supports mineral exploration and mining, and a deeply skilled workforce and support from the local communities as well as the First Nation partners. Add to that, our land package of over 800 square kilometers spanning over 97 kilometers from the Ontario border, where one of Canada's largest gold mines, the D2 Lake Mine, is currently operating, and on which Wallbridge owns two known gold systems at Fenelon and Martiniere, where we focused our exploration efforts over the last few years and have delivered significant milestones. We've done this with firm ESG principles in mind. We're proud to say that in the last couple of years, between 25 to 30% of our workforce is from the First Nation communities. And in August of last year, we signed a pre-development agreement with the Cree Nation government and the Cree communities of Waskaganish and Washasibi, where we now have the support of our First Nation partners in advancing our projects along the Detour-Fenelon Gold Trend. Now, Attila will provide more details on the current mineral resource estimates. We've now delivered a mineral resource estimate of over 3 million ounces in the indicated category and about 2.4 million ounces in the inferred category. Our 2021 mineral resource estimate at Fenelon viewed the deposit as predominantly an open pitable deposit with a balance of that as an underground mineable. The maiden mineral resource estimate at Fenelon contained a large, deep open pit. After drilling additional holes post the 2021 mineral resource estimate, it was determined that Fenelon deposit is more amenable to an underground bulk mineable scenario, with perhaps some smaller, shallow pits around the Gabbro Area 51. This really was due to the excellent continuity of the mineralization, the thicknesses of the zones in our Tabasco, Cayenne, and Area 51. But more importantly, we also believe that an underground mineable deposit has the advantages of potentially lower capex, a faster permitting timeline, and less surface disturbance than a large open pit. As a result, our 2022 exploration program was designed to improve the quality of the resource with a view of the Fenelon deposit being predominantly an underground bulk mineable, while also testing the extensions of those zones outside of the 2021 mineral resource estimate footprint. The results of that program was incorporated into this updated mineral resource estimate. We've achieved 84% and 85% increases in the mineral resource estimate grades of the inferred and indicated categories, respectively, but while managing to add 17% and 11% to the total contained ounces in the indicated and inferred, respectively. The drilling that we completed since the last mineral resource estimate at Martiniere has also significantly increased the size of that deposit. Now, Martiniere is only 30 kilometers west of Fenelon. Any economic deposit there or within the Detour-Fenelon gold trend would be complementary to Fenelon. The 30-kilometer distance is within a trucking range of Fenelon with minimal impact on the operating costs using a centralized mill approach. This would eliminate major capital requirements associated with certain standalone infrastructure at Martiniere or other deposits. I'll now ask Attila Pentek, our VP Exploration, to discuss the updated mineral resource estimate at Fenelon in more detail first, and then at Martiniere.
Thanks, Mars. Hi, everyone, and thanks for joining us. So let's look at the estimation parameters first that were used to drive the cutoff grades. As you can see in these table comparisons, most of the parameters and the methodology stayed the same as it was in 2021. The main most significant change that I should point out is that we used higher open pit mining and processing costs due to the lower open pit component of this resource estimate. And that's reflected in the higher cutoff grades for the open pits resources. At Fenelon, it increased from 0.35 to 0.45 grams per ton. And at Martiniere, it's changed from 0.4 to 0.55 grams per ton. So at Fenelon, in terms of new data, we added approximately 125,000 meters of diamond drilling, as well as 28,000 meters of infill sampling of historic drill core. And our geology models became much more robust, in part also benefiting from the mapping and sampling we have completed in the Area 51 underground exploration drift that we completed in early 2022. At Martiniere, while the 2021 resource was based entirely on historic data, the new resource now incorporates 30,000 meters of drilling that we completed since last summer. This was the first program done with oriented core drilling on this project, which gave us a much better understanding of the structural controls of the gold mineralization. So at Fenelon, as you can see in this side-by-side comparison of these long sections, we've made significant changes to the deposit configuration compared to 2021. Which was the maiden resource estimate. Instead of the over 600 meter deep open pit, which you can see here on the right-hand side with this black line, we now have 96% of the mineral resource estimate contained in stope optimized underground bulk mineable resources, which are reported at the base case 1.5 grams per ton gold cutoff grade. Additionally, we now have 4 shallow open pits, which are centered around the Gabbro zones and Area 51, and those are reported at the mentioned 0.45 grams per ton gold. Here you can see in these colors the indicated resource, which makes up about 59% of the resource, and in front of it is the inferred with some transparency, so you can see the indicated behind it. So how did we accomplish these improvements to the resource? So with the elimination of the deep open pit, we lost a total of just over 800,000 ounces of low-grade ounces that used to be inside the pit, which were above the 0.35 grams per ton open pit cutoff grade, but below the 1.5 gram per ton underground cutoff grade. So, having lost those 800,000 ounces, we replaced those and we added more. So we replaced it with approximately 1.3 million ounces of higher grade material in the above 1.5 gram per ton cutoff grade. So these 1.5 million ounces not only came from the switch from open pit to underground scenario, but a large portion of it was added by our resource expansion drilling around and inside the 2021 mineral resource footprint. The main areas we've seen significant additions were near surface in the Tabasco Cayenne areas, and then also in the northwest of Area 51 as well along the diorite. As you can see here, no resources, whereas we've added significant resources here. And then also in the opposite end, in the southeast along the diorite contact, as you've seen in recent press releases, we've seen very significant additions to the gold mineralization that were not there in 2021. And then, of course, we also added the Ripley zone, which none of that was part of the 2021 resource estimate, and now it became a satellite zone to Fenelon. So one important graph that speaks to the overall quality of the deposit is the ounces per vertical meters. And this statistics is really meaningful when your deposit is compact in a fairly small area like Fenelon is. So most of the ounces are centered are concentrated in an area of 1 by 1 kilometer area down to about 1 kilometer, as you can see on this image here. So that means that it doesn't require extensive infrastructure going several kilometers to mine these ounces in the future. So regardless of the type of mining method, the ounces per vertical meters, both in the 2021 and the 2023 mineral resource estimates, are very remarkable and validate the bulk mineability of the deposit. In the 2021 mineral resource estimate, the high value of ounces per vertical meters, starting around 300-400 meter vertical depth here, extended the open pit down to 600 meters, like we discussed. After additional drilling, after this resource estimate, and based on the continuity and thicknesses of the zones, it became evident now that it would be much more beneficial to review the deposit as a predominantly bulk mineable underground deposit, where it has the potential to deliver attractive economics with lower capex, smaller footprint, faster permitting process than a large open pit. So we essentially now have more ounces in this new resource estimate at a higher grade, and in less tons of ore, as you can see from these black lines, where in the open pit there was a lot of tonnage, whereas now much less tonnage is containing all those ounces. So the 2023 mineral resource estimate now demonstrates the high quality bulk mineable underground deposit at an average of over 3,000 ounces per vertical meters for the entire deposit from surface down to 1,000 meters, and between 400 and 800 meters where the heart of the deposit is, there's over 5,000 ounces per vertical meters. So let's look at all of this in 3D, and I'm just going to switch to a different software. Just bear with me. I hope technology assists. Okay, you can all, Mars, just could you confirm that you can see the, okay, so, we're looking at down at the deposit right now. This is a plan view and just showing the main geology. The most important rock types are this Jeremy diorite and the main gabbro. And you can see the underground workings that exist currently on the project. In 2019, we completed the bulk sample here in the gabbro zones. And then this year, as I already mentioned, we drove out an exploration drift into Area 51 to map and sample that and get to know it. So if we pull up the block models from last year, so this is, you can see in the legend on the right-hand side, so we're looking at all the blocks that were above 1.5 gram per ton cutoff grade. And so you can see the whole deposit here that was reported in 2021. And just pulling up the open pit of that resource at the time, you can see not only was the pit very deep, 600-meter deep, but it also, large footprint. So a large part of the pit didn't contain actually resources. So we focused a lot of our drilling in that near surface area to add additional resources. So now if we look at a long section looking towards the north, just switching that here right now and removing the geology just to clean it up a little bit. So again, you can see the deep open pit in the 2021 resource estimate extending down to 600 meters. So a lot of the higher grade material was actually contained inside that pit. And then the remaining high grade material that was below it, that's what made up the underground resource in the last resource estimate. So now if we compare this to this year's results, I'm just going to remove the open pit here. So this is the block model from this year. And if I toggle it back and forth, you can see a lot of areas where the whole deposit has just really bulked up. We've added a lot of additional resources. For example, if you focus in this upper area, the northwest area that I already mentioned on the plan view, you can see a lot of additional resources there. And then also here at depth in the southeast, sort of down plunge area, we've seen really good resource additions. Now looking at all of this again in plan view, so you can appreciate the changes also looking down. So again, just to focus on some of these areas here where we have really nice high grade material right near surface, new additions. And then also due to the infill sampling that we did, the infill sampling of historic core, we were able to add a lot of additional ounces even within the known footprint. So a lot of resource additions are actually inside that footprint. So it's not all coming from extensions, but you can again see here the southeast area, a lot of additions there. So, looking at the open pits now. So we mentioned that there's 4 smaller open pits now. One is centered here on the Gabbro zones. I'm just going to remove last year's block model and adding in the other open pits, which are all in what we call the Area 51 zones. Again, you can see some of this really nice high-grade material right near surface that makes up the open pit component of the resource. So again, looking to the north, just to get an appreciation of the depth of these pits. So right now, these 150 meters is the deepest part of this pit at the Gabbro zones. We already have an open pit there, actually. That's where the portal is for the underground workings. So that would just be an additional pit there. And then here are the Area 51 pits, which are a little bit shallower. They're about 80 meters to 100 meter deep. And then if we pull up these are the underground stope optimized bulk mining resources. So again, you can see sort of all the ounces being in a fairly compact area of 750 meters to a kilometer. And if we look at this now in a cross section, so looking north, this gives you a good appreciation for the thicknesses of these zones. We see a lot of these zones stacked together, very close together to each other, and large thicknesses of these zones. So that's why this deposit is believed to be really amenable to bulk mining. And of course, the PEA, the preliminary economic assessment, will give us the ultimate answers for that. And just to close off, let me just pull up the drill hole intersections, just to emphasize that, we really just drilled the deposit down to 1,000 meters. So this is where the resource ends. But we have one drill hole that extends further than that, another 500-600 meters. And we hit exactly the same kind of geology, same kind of mineralization styles. We actually hit the same diorite, same gabbro. And there's about a 17 grams per ton over 4 meter intersection there as well. So, it gives us really good indication that the resource will continue in the future. once we continue drilling at further depth. And then just to close off, you know, in plan view, if we look at this again, and just this, it's already speaking a little bit into what the plans are for 2023. We can see that, you know, most of these zones remain open. The diorite contacts and some of the structures that control the gold mineralization, like the Jeremy Fault, for example, those will be some of the targets that we'll be following up in 2023. So I'll just move back to the presentation, and so Mars will talk a bit now about what we mean under underground bulk mining and what kind of production scenarios we envision for the upcoming preliminary economic assessment.
Thanks, Attila. And what I'd like to focus on is the review of the underground resource through the lens of bulk mineability. And here, let's take a quick look at some of the side-by-side comparison of our deposit against one of the analogs that we use, which is the Young-Davidson mine currently operating by Alamos. See, on the left is a section looking west, identifying the Tabasco, Cayenne, and Area 51 zones. And as they converge at depth, they create these large zones amenable to bulk mining. And the center figure, the longitudinal section looking north, shows the strike lengths of these. And we can see when viewing this longitudinal alongside Alamos's Young-Davidson operation, that below the 4 shallow Fenelon open pits that we have a significant underground resource that is still open in all directions, as Attila just mentioned, but have very much similarity to that analog deposit. Now, Young-Davidson has been mining for a few years. It recently increased from about 6,000 tons to close to 8,000 tons per day to a depth of about 1,500 meters. At grades being operated at about 2.2 to 2.6 grams per ton for the last 3 years, approximately generating between 180 to 200,000 ounces per year. Now, this slide here shows some of the comparable deposits to Fenelon, such as Agnico's Gold X, Yamana's Wasamac, and Alamos's Young-Davidson. Now, each of these comparable deposits have veins or zones ranging from a couple of meters to over 30 to 40 meters in thickness. Again, very similar to the Fenelon, and these are continuous as well. And so making them really amenable to bulk mining. But importantly, 2 of these deposits are currently operating successfully. And the Yamana's new project purchased from Monarch is also planned to be in operation in a couple of years. Now, the mineral resource estimates preceding a production decision of these projects were in the range of 2 to 3 grams per ton, with gold ounces of about 2 to 3 million ounces. Now, these producing deposits currently produce grades ranging from about 1.7 grams to about 2.3 grams per ton. Their cash costs range from about $750 to $850 US per ounce, and their all-in sustaining costs range from about $930 to about $1,070 US per ounce. And the production rates are around 8,000 tons per day. Now, all of the data that we have here is derived from the websites of those operations, and also is the last 12 months. So it's the sort of average of the last 12 months. Of course, Fenelon is still at the resource stage, requires additional work, starting with a preliminary economic assessment, conversion drilling, and all other studies. But encouragingly, the current mineral resource estimate at Fenelon is higher than the mineral resource estimates. In terms of grade, it's higher than those mineral resource estimates of these comparable deposits preceding their production decision. Now, Fenelon, as it is current, still has a lot of room to grow, potentially down to 1,500 meters or more, based on that one deep drill hole that we completed in 2021, and Attila just mentioned a few minutes ago. So continued efforts in exploration drilling will help us tell the whole story. I'll now turn it back to Attila to talk about the Martiniere and our 2023 exploration plans.
Thanks, Mars. So at Martiniere, the new resource now contains a total of just over 680,000 ounces in the indicated category and over 630,000 ounces in the inferred category. which was, represents significant increases in contained ounces and also improved grade compared to the 2021 mineral resource. But we really see tremendous potential at Martiniere and plan to spend $11 million on exploration there this year. So most of the resource additions came from extensions of known zones along strike and depth. So you can see again in these side-by-side comparisons, some of the resource additions along strike. But then very importantly, you can see how in 2021, the resources were isolated, separated from each other, and they had these smaller isolated open pits. And our focused drilling in the area in between was now able to connect them. You can see the continuous continuity between the two trends, and now the open pits are able to connect. So the deposit remains open in most directions, and is largely untested below 400-500 meter vertical depth, as you can see also on these images. So we're far from the depth that we've drilled at Fenelon. Here again, you can see the depth ticks. So the deepest part of the resource is around 400 meters, and there's really not much drilling below that. So our recent drill results have shown that these shoots can be extended, so we will continue on larger step outs there. And we also opened up some new areas for expansion, like one of the last drill holes that we reported, where in the east we found 3 new zones in one of those last holes. So overall, the combined Detour-Fenelon Gold Trend mineral resource estimate now contains a total of 3.05 million ounces of indicated and 2.35 million ounces of inferred resources, both around 3 grams per ton overall grade, which represent really significant increases both in grade and also in contained ounces since the 2021 resource. So let's look at the plans now for 2023. Following up on the updated mineral resource estimates and in anticipation of the upcoming preliminary economic assessment in Fenelon, our 2023 program will be aimed at both expansion of known gold deposits and making new discoveries on the rest of the underexplored land package. So the largest portion, about half of the budget, will be devoted to Martiniere, where we will be completing expansion drilling with large-spaced step outs on the known gold trends and the ore hosting environments to continue demonstrating the size potential of this deposit. We'll also start working on various technical studies, such as metallurgy, geotechnical, rock characterization, with the goal to bring this project up to the same level of advancement as Fenelon in order to include it in future economic studies. At the Fenelon deposit, which, as we've seen, remains open laterally and at depth in multiple directions, we plan to drill around 15,000 meters, which is again focused mainly on large step outs of the known gold zones and host environments, as well as the important structures such as the Jeremy Fault and the Sun Lake Deformation Zone, with the hopes of discovering additional extensions and new gold zones or satellite zones like we've seen at Ripley. So the remainder of the $36 million 2023 budget will be devoted to regional exploration in the vicinity of the 2 known gold deposits, testing some drill-ready targets, and developing our pipeline of other grassroots exploration targets. So zooming into a couple of these areas, first we're going to look at the eastern part of the land package. So you can see here the Fenelon deposit as a reference. So outside of the drilling that we've done at Fenelon, at the Fenelon gold system, there's very limited geologic information and historic drill testing on the Fenelon property itself and the neighboring Harry and Grisette properties. And there are several targets within a few kilometers of the deposit that show geological and geophysical characteristics that are very favorable for the deposition of gold mineralization. And therefore, the 2023 program will drill test some of those priority targets. So you can see with these boxes some of the extensions of the host rocks and structures that are controlling gold mineralization. You can see with these gray dots, those are the drill holes that exist on the properties. Not all of them are diamond drilling. Some of it is RC or other types of drilling. And you can see just going a kilometer or two away from the deposit, and there's barely any drilling, and basically about 20 kilometers strike length here at Grisette with almost no drilling at all. Here on the Grisette gold property, which is located east of Fenelon, we've been developing a very promising gold exploration target, which is a strong flexure in the Sandy Lake Deformation Zone. As you can see here, these flexures are generally very favorable areas. Fenelon is also sitting at one of these flexures, and there's a very folded stratigraphy, and these are known to be excellent settings for gold deposition. So looking now at the western part of the land package, centered around the Martiniere deposit, we again have a large number of prioritized exploration targets on the Martiniere property itself, as well as the surrounding Cassot and Harry properties. Some of these targets are again ready to be drilled and will be selected for drill testing this year. And some others require a bit more grassroots exploration to prepare them for future drill testing. An example of that is the Cassot's East Block, where we've flown a very detailed high-resolution magnetic survey this year, a drone magnetic survey, which you can see is much better resolution as the regional mag. And that has really identified a significant secondary splay of the Sandy Lake Deformation Zone, which appears to be associated somehow with the Lac de Dois Deformation Zone as well, which controls the Martiniere deposit and also some other showings in the area. So we've selected now this area here for a sonic drill program, which is sampling basal till along the structure, which will be completed in the first quarter of this year, in the hopes of getting this ready for future drill testing of some of the prospective segments of the structure. And then finally, at Cassot, the western block has already seen good results from our programs. In 2021, our grassroots drilling outlined the gold-bearing environment. Some of these structures have shown to be gold-bearing, and there are some of our gold intersections are up to almost 7 grams per ton over 2 meters. So we'll be following up those results with some field work and some more geophysics. So I'll hand it now back to Mars.
Oh, thanks, Attila. As you heard, we're pleased with our achievements since the 2021 mineral resource estimate, and strongly believe in the potential for expansion and discovery, not only at Fenelon and Martiniere, but elsewhere on this extensive land package we control in the Abitibi, which we feel is one of industry's most promising and prospective. Now, to recap, we've demonstrated large gold systems both at Fenelon and Martiniere with more than 3 million ounces in the indicated category and 2.4 million ounces in the inferred category. We're currently working on a preliminary economic assessment for Fenelon, which we expect to deliver in the second quarter of this year and demonstrate the value of Fenelon deposits. We see significant opportunities for growth, not only at Fenelon, which could be a much larger deposit, but also at Martiniere, where we see future improvements in its size for open pitable as well as underground type resources. We have a large land package, which is dramatically underexplored in comparison to the southern belt between Val-d'Or and Rouyn-Noranda. We see potential for multiple discoveries along this land package. We started this year with about $23 million in our treasury, as well as an approximately $4 million, which is expected in this quarter to be received from the Quebec government for the balance of our 2021 refundable tax credit. And the balance of that $36 million program is expected to be funded from other sources. I'll now open the meeting up to questions, and Sean Stokes will be reading those questions.
Thanks, Mars. First, an apology. I neglected to introduce a key team member, Bob McDonald, our GM of Mining Operation and Projects at the outset. So the first question, Mars, is two parts. One is, how is Wallbridge looking at the sequencing of the open pits and underground development? The second part is, does the new bulk mining scenario make use of the existing underground workings, and in what capacity?
Sure. So it's very early to say until the preliminary economic assessment is completed. But the indications are that you have 3 or 4 small deposits. Typically in these, it's advantageous to have some pit material, especially when you're ramping up your production, testing the mill, and also potentially some of those open pits, once they're completed within the first 2-3 years, that it can be used as a storage for the tailings or your waste rock. But again, all of those will be reviewed in the preliminary economic assessment, at least in the preliminary stage. What was the second part, Sean? Sorry,
Does the new bulk mining scenario make use of the existing underground workings, and if so, in what capacity? So
the type of production profile that we're looking at today, as mentioned in some of the analogs to Young-Davidson, the current mine workings is only down to about a couple of 100 meters, and potentially the material handling system may require additional infrastructure such as shafts or any other alternatives. But certainly we want to maximize the existing infrastructure that's there, perhaps even in the early stages of the production. And so we'll determine those again once through the review of all of the mining applications in the preliminary economic assessment.
Okay. We've had a couple of questions about when drilling for this resource, the MREs, was cut off, and also when we expect to put out additional results.
Okay, Attila, perhaps you can answer this.
Yeah, the cutoff date for the geologic models and the drilling data that's included here is early November. So we've when we designed the program last year, we fast-tracked all the drilling that was needed for the in support of this resource estimate to be completed in time. So by early November, we had most of the assays that we were looking for to update this resource. But of course, with the size of our programs, there's always a large number of assays still in the system. So we continue to receive more assays, and we'll continue to announce some more results from the 2022 program still.
Okay. We may as well continue with Attila. So there's a question, Attila, asking what exploration areas excite you the most?
Well, I think, it's the ones that I've shown on the map. It's going to be the next week. We'll spend a lot of time with the geos to try to get to a consensus of what the favorite targets are. But yeah, there's certainly a lot of good targets that in the last 2-3 years we've really focused so much on resource drilling and trying to keep growing the resource, that now we're really looking forward to some of these bigger step outs and getting to test some of our ideas to get into some new discoveries. So yeah, I mean, the list is kind of endless. The land package really has a lot of potential. So yeah.
Great, thanks. There's a question regarding funding for 2023 in terms of current resources and plans to fulfill the drilling program.
I'm going to revert that to Brian.
Yeah, thanks. Thanks, Mars and Sean. You can see from what we've disclosed in our news release that there's about $9 or $10 million that we have to fund. The status of the 2021 refundable tax credit audit is we received a draft assessment. We agreed with the minor adjustments, and we're expecting a final assessment and that $4 million to come in the first quarter. That is pretty much locked and loaded at this point in time. Another source of financing is last year, when we file our tax returns, we claim refundable, for last year's taxes, 2022, we will file our returns in April of this year, and we'll be claiming a $10 million, $8 to $10 million refund. We will fast track that as much as possible, so that's another potential source of funding for the year. And obviously, we will need to raise some equity, and we'll do that as on an opportunistic basis. But the program here is designed to minimize dilution, advance the projects at the same time, and I think we achieved those two goals here, the way it's laid out.
Thanks, Brian. There's a question here regarding advancement of environmental and other studies, and also adding on there if we're looking at any alternatives to material movement versus sinking a shaft at this point.
Yeah, so I'll answer that. We've continued doing the environmental baseline study as well as all of the required studies that would advance the project to its ultimate stage of production. And in this year's budget, we certainly have allocated approximately $3 million in the studies, both at Fenelon and Martiniere. The studies at Fenelon obviously have been quite advanced in terms of environmental baseline and in fact, some of the required studies for the permitting. That will continue. And as Attila mentioned, Martiniere hasn't really seen a lot of environmental baseline work, nor a lot of the geotechnical or metallurgical studies. So therefore, we also have allocated some of that in this year. In terms of infrastructure, again, I mentioned that it's too early. Certainly the way the deposit is, that it is possible to defer the shaft sinking or shaft alternative in terms of material handling to be able to utilize the ramp access for the upper parts of the deposit, partly because the deposit's really starting from surface down to 1,000 meters. But once again, those would be answered perhaps more clear in the preliminary economic assessment.
And maybe just to reiterate, Mars, when the PEA will be completed.
So as I mentioned, the preliminary economic assessment was commissioned in the fourth quarter of last year, parallel to the MRE. There is a lot of work that's already been done, but obviously the PEA will have to have had the final mineral resource estimate update prior to incorporating that. So we expect the PEA to be delivered in the second quarter of this year. Hopefully, as we mentioned, the MRE was expected to be done in Q1, and we managed to actually do it very early in the Q1. So we're hoping that we can do the same with the PEA. But obviously, we need to make sure that the PEA looks at various alternatives in order to ensure that we demonstrate the value of the Fenelon deposit, which we expected based on what we presented today in terms of its bulk mineability to be positive.
Okay. Just a question here on timing and the rationale behind issuing the MRE at this point.
So I'm not exactly sure the context in which the question was posed, but we drilled about, as Attila mentioned, about 125,000 meters at Fenelon and additional infill sampling. We felt that we required to provide an updated mineral resource estimate based on what we understood post the 2021 MRE. And we believe that in order for us to really demonstrate the value of Fenelon, we needed to complete this MRE now so we can develop the preliminary economic assessment. That's the reason for the timing of that.
Okay.
Sean, just maybe a couple of abbreviations that we used in the presentation and in our so one of them is a DSO that we talked about, is really a Deswik shape optimizer. Essentially really look at the stope optimization. So when you really look at an underground, when we talk about an underground mineable deposit, perhaps starting about a couple of years ago this started, but before that typically you would use the whittle open pits from your mineral resource, and whatever the remaining was you would consider that as an underground deposit. Whereas our 2021 as well as this year's is really based on a stope shape optimization. So the resource is really hopefully the preliminary economic assessment will have a pretty good conversion factor from the mineral resource estimate to the PEA level. But again, we'll take a look at all of those. But that's why the DSO is really a shape stope optimizer to demonstrate the real understanding of the mineability of the deposit in that resource. There was another one that we used, is called the LTM, and just want to say that means last 12 months, just for those who may have not received that. So all of the numbers that we provide in the comparison in terms of cash costs and all-in sustaining costs and grades of the comparable deposits were really the average of the last 12 months.
Okay. And there is one question here about efforts by the Quebec government in terms of infrastructure and assistance with respect to infrastructure. I don't know whether we can answer that, but I'll put it out there if we can.
Well, I think one of the key components of this project is a support from your government wherever you operate. And certainly Quebec has been really embracing exploration and mining development, particularly in this area, whereas we know Tonomatogamy, which is, with the new road improvement, would be about 75 kilometers from Fenelon or thereabouts. Tonomatogamy just had one of their operating mine closed by Glencore, and certainly the opportunities that exist for them, and as well as ourselves, to use Matagami as perhaps a center for the supply chain and the labor chain value is really good. And the Quebec government, as well as the municipalities and even the First Nation partners, are really supportive of all of our efforts in terms of advancing our projects, particularly at Fenelon, but along the entire Detour-Fenelon gold trend.
Okay. And that basically covers questions, Mars.
Well, thank you very much. And I hope we've answered most of your questions today. And as we went through the presentation, we demonstrated the value of the current prospective land package, as well as our resources along this Detour-Fenelon gold trend. So I encourage you to ask any other questions that you have, either through myself, through email, as it is on our releases, or Victoria Vargas, who's our capital markets advisor. And we look forward to a successful 2023 and hoping for that new discovery along this underexplored land package. Thank you.
And that concludes the call for today.
Thanks.